Hello there, I am Thamizharasu, your trusted business coach. In today's world of competitive business and understanding of financial metrics is crucial to take your venture to the new heights. One such metric that often gets overlooked is the contribution margin. Today, we will dive deep into this powerful tool to explore how it can help drive profitability. Let's get started.
1. Understanding the basics of contribution margins. Contribution margin is a cost accounting concept that lets a company determine the profitability of individual items that they sell. It's equivalent to the revenue per item sold, less the variable costs involved in producing that particular item. This metric is beneficial in deciding which product to continue selling and which one to drop. 2. How to calculate contribution margins, a step-by-step guide. To calculate the contribution margin, you subtract the total variable costs of producing a product from the total sales revenue of that product. Then, divide the result by the total sales revenue. The formula is contribution margin equals sales variable costs. Sales. Let's break this down with an example in our next video. 3. The importance of contribution margins in business operations. Why is contribution margin important, you ask? Well, it helps businesses determine the profitability of different goods or services. It also provides a clear picture of production costs and helps you make informed decisions about pricing, product mix, and maximizing profits. 4. Analyzing the role of contribution margins in profit maximization. The contribution margin helps you understand how changes in your sales volume would affect your profits. By knowing the contribution margin, you can strategically adjust the price or volume of your product to maximize your profitability. 5. Break-even analysis, understanding the link between contribution margins and cost-volume profit. The contribution margin is a key figure in determining a company's break-even point, the point where total revenue equals total cost. Business owners can use this information to understand how much of a product they need to sell to cover their costs, and subsequently, make a profit. 6. Practical approaches to boosting your business's contribution margins. There are several ways to increase your contribution margin. You can increase your selling price, reduce variable costs, or sell more of the high contribution margin items. 7. Contribution margins in service-based industries. Even though contribution margin is commonly used in manufacturing, it's equally important in service-based industries. It can help service companies determine the profitability of different services and make strategic decisions about service pricing and provision. 8. Contribution margins vs gross margins, a detailed comparison. Many confuse contribution margin with gross margin, but they're quite different. While the gross margin is a company's total sales revenue minus its cost of goods sold, divided by total sales revenue. The contribution margin is specifically about the profitability of individual items. 9. The role of contribution margins in pricing strategies. By understanding your contribution margin, you can make informed decisions about your pricing strategy. It helps determine the minimum price at which you should sell your product to cover the costs and still make a profit. 10. Case study. Effective use of contribution margins in major industries. We'll conclude this series with some real-life examples of how contribution margin analysis brought about a positive change in major industries. In the automotive industry, contribution margins are used to analyze the profitability for each unit sold. In the food service industry, contribution margins play an integral role in menu pricing and inventory management. In the software industry, especially in software as a service, SaaS, companies, contribution margins are key to tracking profitability given the high proportion of fixed costs. In conclusion, understanding and accurately calculating your contribution margins is an essential part of strategic business planning. I hope this video gave you a clear understanding of contribution margins and their importance in business. And remember, if you found this information helpful, Don't forget to subscribe to our channel for more valuable business insights.